What's up, everybody? This is Misael Gonzalez. You're watching Wall Street Saturday, a show about God, investing, and stocks. Our show is for educational purposes only. We're not financial advisors. So go ahead and enjoy the show. Share it, like, subscribe, and hit the notification bell to be notified every time a new video comes out. Thank you.
Hello, everybody. Welcome to another episode of Wall Street Saturday. It is Saturday, March the 5th. And today we have some interesting topics, mainly following up on some topics from the previous week. So with that, I'll get us started with the prayer. Lord, thank God for another day. Thank you that we can come together and discuss what's going on in the market, Lord. I pray that you will be with us and you will be with our conversations. We give thanks for everything we have, and we give you praise in Jesus Christ's name. Amen.
Amen.
All right. So with that, my name is Misael Gonzalez.
I'm Joshua Trusty.
And I'm Josh Flores. Like Misael had said, we've been kind of talking quite a bit about what's going on with Russia, what's going on with the Federal Reserve, these interest rates and everything. And so obviously it's having a pretty big impact on what we're doing with our investments. Things are not too green lately. I mean, everything is on sale. It's real hard to find a good investment to go long. I'm sure the short positions out there, the people that are doing that, I'm sure they're doing just fine, and so that's tough. That's rough for me, for a person who typically just goes long. I haven't really had too much luck with trying to go short or really doing options. I mean, you got to have some experience and really know how to price some stocks and things or value, I should say, right? Well, maybe. I mean, I think valuing a stock is a little bit more easy than pricing a stock, right? Am I saying that right? One of you guys? But
you can always convert between the two. Like, every price will correspond to some particular value. But I think sometimes when someone says, I'm going to price the stock, they're thinking maybe in terms of technicals versus fundamentals. If you want to value a stock, that's more in line with the fundamentals.
Yeah. So, I mean, I'm not too good at that personally. I mean, I have my own things, but it's a lot easier when you have bigger companies, say like a Microsoft or an Apple. It's just a lot easier to work with those. But yeah, I mean, not to get too far off, but I know last week after we had recorded our videos, we were trying to set those up. We saw that Russia got kicked out of SWIFT, which I don't know. I think I did say it on last week's recording, but I didn't think that was a good idea for the U.S. And I think that, I mean, I say that, right? I mean, what else was the U.S. going to do, right, in this whole situation? I don't think we should go to war. I don't think that was going to be another option, right? But being kicked out of SWIFT, I think was pretty tough, and I think that it's going to have some repercussions. I think that we have a later video that we're going to be talking about some things in regards to how Russia is going to be handling some of their repayments, right? I don't think it's as easy as just them using the gold that they have. But yeah, just following that, of course, Fed Jerome Powell, right, our boy, our savior of these times, our inflation hero. Yeah, he testified in Congress this week, and he had brought up a couple of things. One of the things that he had mentioned is that they confirmed that the interest rates were going to increase 25 basis points. So that's going to be 0.25%. So that's pretty much nothing, right? I think what we've all been kind of on the edge about is whether or not it was going to be 50% or if it was going to be a whole percent or whatever. Sorry, excuse my language with that. You know what I mean, 0.5%, not 50%. But I think we were all kind of worried about that. And so March 15th, March 16th is the Fed minutes meetings, when I think they're going to be talking about how they're going to be rolling that out. So that's always a fun time in American history when they raise interest rates. We'll see what happens to housing and things like that. And obviously our economy is going to slow its growth, right? But we did have a good jobs report. I did see that was better than what we were expecting it to be. So hopefully that also has a little bit of a impact on the supply chain and some of the issues that we're having there. So it's all kind of twisted right now. There's a lot of factors going in. I don't know if you guys have noticed anything else that was going on this week.
I mean, I think for me, I noticed the impact of of Russia being removed from SWIFT in one of like the positions that I hold, which is FAS. I think like around like there's like that particular ticker actually went down because a lot of investors were concerned about Russia being removed from SWIFT. And then like when the US like was really slow in removing Russia from SWIFT, it went up. And then once we actually did it, we actually removed them from SWIFT, it went down. So overall, FAS is down by, I think like more than 5% for the week. It's around like 7%. And, you know, like that was like actually down by about, yeah, negative 7.88% for the week. And, you know, that for me, that was a play that I was looking to like forward to as like a way of capitalizing on the Fed increasing interest rates over time. And I think Russia being removed from SWIFT definitely has put a damper in that one, because all of like the fear, uncertainty, and doubt really casts like a pretty dark shadow over the future of the financial system, because Russia, we no longer have like a moderately significant player like in SWIFT. So that's going to reduce the money velocity. And I'm still trying to figure out what's the long-term impact going to be. So, you know, like if you're investing in the financials, it's no longer just a matter of looking to Jerome Powell and the Fed's like for increasing interest rates. You also have to take into account what's going on as part of the international community rather than just locally in the US.
Yeah, I was gonna say before oh, sorry.
No, I was gonna say, yeah, it was an interesting, weird effect that was happening this week. Maybe it was news shock or sentiment shock, because usually what we've been seeing is, you know, if equities are down, the interest rates are up. But in this situation, I mean, both of them were down at some point. And that's why you saw the banking stocks or the bank stocks go down, because interest rates were going down, and obviously they lose money when that happens. So really interesting. I mean, I think we have enough ingredients, you know, for kind of like, you know, we'll talk about this further later, but for us to have like some, you know, bear market, a little bit of that. But yeah, that's something I saw that was really interesting. And in terms of I mean, you have oil prices going up, you have interest rates going down, stocks going down for, I think this may have been 2 weeks in a row that the Dow had more than 4 days that was in a downswing. And you could see that it would recover during the day, but, you know, every time it goes low and then recovers a little bit, and then the next day it goes down. So overall, we're in a downward trend. At some point, you know, like we were talking about it, people are just going to stop buying the dip because the move is not, I mean, the trend is not moving that way. So, well, yeah, really interesting times, you know, compared to what we've seen in the past 2.5 years, I guess, really, because, you know, interest rates were going down, equities were going up. And when one of them was down, the other one would go up. So, and we're starting to see that they both move in the same direction, and that is something that's very interesting.
Do you guys think it might be because investors are anticipating that the Fed won't be able to increase interest rates as quickly as they had hoped? Because, you know, like we talked about this before offline, like, you know, 25 basis points is pretty much nothing compared to what some investors were expecting.
Yeah, I don't really know what it really is that's kind of causing this down, but I don't think that it's the interest rates. I think that those have already been priced in. I mean, I think on around that, I think that more uncertainty is around whether or not we need more, right? But again, like you were mentioning, like I don't with Russia.
Yeah, I heard it said, sorry for interrupting, but I heard it said that we've weaponized our economy for war efforts. And I think that's what is spooking like investors overall out. You know what I mean? One thing is, you know, in intra-country issues, you know, interest rates, inflation, et cetera. But when you start meddling in other economies around the world, then you put yourself at risk. And I think that's what we're seeing. You know, the economy is now vulnerable to whatever. You know, it could be cyber attacks from Russia. So that as a whole, I think spooks the investors, and we haven't been in that position before. But sorry, go ahead, Josh.
No, I was just going to just kind of state, sorry, I was kind of gathering my thoughts. You said something that just kind of threw me off. Shoot, my bad. You guys come back to me real quick.
Oh yeah, I mean, yeah, like I said, you know, it's like something that we haven't seen before. Usually we deal with issues that are happening just in the US, but we've cut off someone from the global economy by just asking other countries to shut them out. And I mean, I think the extent of it, I was reading an article. I mean, they weren't expecting it to happen that fast and so broadly. And so I think that's a little concerning on my side. You know, I think I'm concerned for the long-term effects that this may have, because something that I brought up earlier this week was, you know, when Germany started World War I back in the 18, actually, I don't know when that was, but anyway, when they started that, and when it was over, the rest of the countries imposed like financial burdens on the German economy that eventually destroyed it. Pretty much, it was like hyperinflation. I mean, the franc was like super valueless, and so that's what fueled the Second World War, because Hitler was able to say, hey, you know, we're gonna bring Germany back to glory. So it just, you know, I'm not saying it's gonna be the same way, but it's not good when we mess and try to punish someone through economic measures, at least not to the extent that we're doing it to Russia. But that can be a controversial opinion by itself. So we'll have to see what happens.
Yeah, because like even if you're waging war economically, you're still messing with people's like livelihood. Even if you're not necessarily, you know, killing someone, like physically speaking, you're still messing with their ability to succeed, like financially, to feed their families, or to achieve whatever dreams they may have for themselves. So it's never a pretty thing when a war occurs, either, you know, physically speaking or financially. And I think, you know, a lot of countries are trying to, you know, wage war economically, just so there's a lack of bloodshed, but still, it's not gonna be like, oh, no hard feelings, you're just hurting my economy. Yeah, there is going to be a blowback. And I think, like you said, Misael, like with cyber attacks, we could see some sort of response that occurs as a countermeasure, like from Russia on U.S. businesses potentially. So companies that are in cybersecurity could see some sort of like boost, because more companies like need stronger cybersecurity to protect against Russian efforts. So with that said, I mean, I think, yeah, these are still uncertain times, but it's good not to, you know, just panic sell and just like try to prevent like further loss, because you never know when the tide is going to turn. So there's a saying that says like the lowest ebb is the turn of the tide. So you want to be ready for when the tide turns and things are green again. So stay long. You might not be green now, but don't worry. If you're keeping the long-term view, the green will return again. Stay long, stay green if you can.
Hey guys, thanks for checking out the video this week. If you haven't already, please like the video and subscribe to the channel. Every week we're going to be uploading a couple of videos every Saturday of opportunities that you can take advantage of in the markets. Thanks again and have a happy trading week.